Okay, I'll spare any blood stuff. Before I get into the charts here, just a comment. I haven't mentioned ads in a while, but this is a serious business note. And no, it's not just me saying you really should click on some ads. The thing is that last year was a great year for ad income, and this year I'm running at like 1/3 what I was, and it's not because 2/3 of my traffic is gone. It's just because I think for one thing, just the whole ad business model is starting to kind of fall to pieces, which is why Yahoo sucks so bad as a company. And the other thing is that people are just clicking a lot less. And at some point, I'm actually about to roll out my subscription-based Slope of Hope. And if things keep going the way they're going, I might just reach the decision of making it totally closed, which, the only gratification I really get from a large audience is just, a little ego stroking. But I'd rather not do that. I'd rather keep it open. And it would kind of help if ad revenue were decent, because like I say, it's like down way over 50%. So think about it. Anyway, another comment, nothing to do with guilting you, but just about today in general. It's a very funny thing, because I've noticed, and I've said this before, that my very best days never start off seeming that way. In fact, usually they turn out to be starting off very worrisome. And conversely, some of my less good days start off very promising. So today was a great example of the former, because, I'm obsessed, and as usual, I was, watching the market all after the close yesterday and into the evening, and before I go to bed, and I woke up at 3 a.m, check it then, da-da-da-da-da. And it was a pretty good day yesterday, and so I was hoping for a little bit of follow-through today. And it was kind of disappointing. The euro was up, the ES and the NQ were up, gold was way up, et cetera, et cetera, et cetera. And the day kicked off, and my portfolio instantly went down, and I got stopped out of a handful of positions. So it's like, Christ, But I held firm, and not only re-entered some of those stopped out positions, but got into some more. I entered the day with about a, 63% commitment, and I ended the day about a 68% commitment. And it was the best day I've had in a long time. The selling just kind of sped up through the day. So it was the first good day for the bears in way too long. And something I've just noticed, seriously, I only just noticed this when I fired up my little recording device, and I triple checked to make sure my freaking microphone is on this time, is that we have retraced the entire QE3 rally. Just about. Maybe there's a point left or something, but here's where Doofus announced that he would in perpetuity buy tens of billions of dollars of bonds every single month. So here's an old dickhead did his thing, and we had a huge soar and then a follow-up soar on Friday, and that was the peak. We peaked at 1468, so we've lost 30 points from there. And for a while, we're just kind of meandering around, and then finally it got a bit of a zoom-a-doom. But the point I'm making here is that this entire nonsensical thing has been upended. And just drink that in for a second, because let's be clear, it's not like Dickhead pulled the accommodation away. The punch bowl is still very much there. It's just that we're beyond the point of diminishing returns. We're going into negative returns, which has been sort of our dream all this time, that just because Scumbag over at the Fed, he's got a lot of names, I'm very creative, has promised all of his friends unlimited cash so that he can get a fantastic salary after he's done with his chairmanship, is starting not to work. And I say again, this has nothing to do with employment. Don't be that naive. It has nothing to do with employment. It has nothing to do with inflation. It has to do with his own personal agenda, period. It has nothing to do with the nation's health or unemployment. There's a bunch of nonsense. If it really had to do with unemployment, why would they have spent over $1 million per job to get here? It doesn't make economic sense. So this is nothing but a betrayal of the country. And anybody dumb enough to think that he's being honest is just dumb, and you shouldn't be here. So, press the off button and go to Yahoo Finance. Anyway, So I'm not naive enough to think that we're going to enjoy this sell-off for a while because the powers that be will do all kinds of things. I will say now, in advance, that when they ban shorting, and they will, when they ban shorting, that's when we'll be very close to a real bottom. And that's probably like, many months or even years off. And it may happen multiple times. But I say here and now that when they ban shorting, or when they come after me personally, that's when we'll be close to a bottom. They will get desperate. They're doing it in Europe now. And I'm not saying they'll do it anytime soon here. I mean, goodness, we're only, we're at 1438 for God's sake. We're overvalued by 100% on the market. So we're not close to it now. But the day will come. So just, remember that. I haven't drawn it, but you can sort of kind of see a descending channel here. So it wouldn't be shocking to see us bounce to some degree in the next day or two. I'd almost like that, actually. I mean, as enjoyable as these plunges are, I think it would make for easier target practice if we did bounce to, 1445, maybe as high as 1450, something like that. Because if we get an instant plunge, intervention might come sooner in some form. So that's one of the reasons I kind of did a little covering, because I was 75% committed, but I covered a big diamond position, a big portion of my IOIR position, and Apple, believe it or not, I actually shorted Apple above 700, and I took profits on that. So trimmed it down a bit, down to something like 68%, down from 75. So still fairly heavily committed, but not as grossly so. And I haven't touched margins since 2009. Seriously, it's been a while. So there's the ES, and how about that? Okay, so let's back this up to a daily chart. And as I said, I'm not that optimistic about, let's not even joke about so-called wave 3. I suppose it's totally within the realm of possibility that we retrace to this apex and to this former resistance level. So let's target getting to about, what is that, 14, 15 or so. It's not that far away, but at that time we can sort of reevaluate. I don't think it's going to bounce to new highs, but there's no telling. I'm kind of taking things one tick at a time. But there's some room here for a little bit more of a fall. The manipulation is going to continue really heavily until Obama wins his second term, and then they don't have the motivation to lie as much as they're doing right now, and then we can get a little bit more reality into the system. I had called your attention to VIX, and we started to pop on that today. Because as I had mentioned, as you can see here, we're sort of doing a bit of a lift off from that green bar. But I pointed out we've got some spacing here between these peaks and these valleys, and we're the time's sort of getting ripe to do another push higher. Can you imagine they actually allowed this to happen at one time? I mean, I guess they just didn't dawn on them how much power they had back then. Remember when Paulson literally got on his knees to beg, what's that awful woman's name? The Congress, the grandmother, to beg her to approve TARP. Pelosi, that's it. Thank you, brain. At the time, they actually thought they had asked permission for things like that, so he was literally on his knees. I wish she'd kicked him in the face, but she said yes. Figures. But they've got all the power in the world now, and as one sloper mentioned, because I said, well, what else can he do now? And they said, well, he could just double the purchases or triple them or quadruple them or whatever. But the more he does that and the more it doesn't work, I think the more panicked they're going to get. Looking quickly at the indexes, there was some damage done in our favor. The breakout on the NASDAQ Composite has failed. It's not an if, it's a fact. OEX, we had broken above this long-term trend line a bit, but we have slopped below that again. And who knows? I mean, maybe we could get as low as this trend line, but as I said, I'm keeping my goals modest. The Russell, it's amazing because we actually came within, how close do we get to a new high here? This was 868.5. The lifetime high was 868.57, 7 pennies away. So a little bit of a risk here because we're just about to kiss this trend line. If we break it, that will help. That will definitely help. Looking at the S&P, we had broken out of this wedge, but good news for the bears, we've broken beneath it. So this opens up this range in which to tumble back down into. So hypothetically what could happen is that we could ease back down to this trend line, and then I would basically cover like Madman and do a little bounce for God knows what reason, and then get more serious about shorting. So this may be the top. I've said that 87 times so far, but this may be the top here, back on the 14th, post QE3. So maybe we'll see a dip to here, an attempt to push higher, and then a real break, which would be beneath this one. At which time, it's really time to rock and roll, because we've got 4 years of vengeance to lay out. XMI, a bit of the same deal, starting to break down from this lofty peak. Silver had a pretty nice dip today. Nothing fantastic, just 0.5%, but I think we're edging our way back to this trend line. And those of you who watch me on Tasty Trade, and by the way, notice the new banner I've put up just beneath this video. I'm going to leave that there forever. I've removed the Elliott Wave one for reasons that you might guess. But I'm going to leave that Tasty Trade one there because you can when you get a brokerage account with Ameritrade, you get free access to Tasty Trade, which is like $8 billion value or something. So go ahead and do that. I did today, actually. I opened an account for one of my kids. But the point I made on Tasty Trade was that I actually kind of buy into the fact that maybe I should be buying some more bullion. And so if we can ease back down in precious metals back to this trend line, I'm going to make a visit to my friendly local dealer and try not to buy any tungsten that I don't need. A couple of quick things to wrap up. IYR, very exciting. I've did a post on this earlier today. We essentially are here. We're back on August 2, 2011 as far as this analog goes. It's finally happened. We've been watching it closely, and I was so far so good on this. I'd pointed out the failure to reach the upper trend line here, and we've got the part 2 of that, which is the break of this trend line. All systems are go. This could be a fantastic short and a great guide for us to kind of look for bounces. So I've sort of shoved the GDX aside as our really light to the market, and I'm going to be using IYR instead. So if we get this kind of big strong dip somewhere down here, would be a great time to cover, I think, and then maybe we'll get a pop back higher, and that will give us some guidance in terms of re-entering those shorts. And lastly, TLT. This is just about the only thing I lost money on today. Lost about $500, about $420 on this. I got out before it got much stronger. We had broken this trend line, but we're pushing back above it again. And this head and shoulders is a complete mess right now. So I'm starting to lose a bit of faith into the excellence of this trade, but still keeping an eye on it. We've still got a series of lower highs here. I'd be hard-pressed to see it pushing above there, but if it does, then all bets are off on bonds being in a bear market. Okay, so that's it for me. 73 positions, 68% committed, really good day, and totally cool if we get a bit of a bounce, because that'll just keep them off their game. Click some ads, you people. Thanks. I love you in my own way.